Very good evening. So today we going to start the value-added tax computation, which is coming from your exam paper. The practice question: Sumudu Graman Private Limited is a VAT registered company for the from 2002 and carries on the business of manufacturing, importing, and selling of various type of garment items to the local and foreign market. It means it's selling the products to the local market as well as the foreign market. It means it might be it engaging with export activities as well. The company manufactures ready-made and tailor-made garments under the own brand SG, which popular in the both and foreign markets. The company has obtained the deferment facility from the Director General of Customs. The transaction entered by the company for the taxable period from 1st March 2024 to 31st March 2024. The taxable period is 1 month period is given. The sales and income, this is output tax, purchases and etc. That is input tax. The payments also there. In addition, some is there. Total output, input, VAT payable, refund due, carry forward any unabsorbed input tax, if any. Right. So if we go to the question again, so if we deal with the output tax, the supply of manufactured and import items to VAT registered customers. It means supply of manufactured and import items to VAT registered local customers on tax invoices because the seller and buyer both parties are VAT registered person because we issuing a tax invoice. Supply of manufactured and import items to supply of items for VAT registered persons on tax invoice here. VAT registered persons on a tax invoice, it is 150 million. If so, you can see 150 million. And the applicable VAT rate is 18%. The standard rate should be, the VAT amount should be then this multiplied by this, it is 27 million, isn't it? Yes. The supply of manufactured and import items to the local customer. Supply of manufactured and import items to the local customers who are not VAT registered. Uh, who are not VAT registered under commercial invoice. Supply of items for non-VAT registered persons under commercial invoice. You can see here it is the because if those persons are not VAT registered, we are not issuing a tax invoice. Therefore, a segregation of the value of supply is needed because the supply of manufactured and import items to local customers who are not VAT registered. Because if they are not VAT registered, they can't claim as input tax for their uh, VAT payments. In that case, we are not issuing a tax invoice. There is a no segregation of the VAT portion as well. In that case, we need to uh, figure out the value of supply. Who has not VAT registered for the VAT under commercial invoice is 34,500,000. It means 34,500,000 is including the VAT. And what is the value of supply then? It is this much into the VAT rate is 18% because even though that persons are VAT not registered, we are registered, we are selling as output tax, we need to pay VAT to the IRD. Because sale of the manufactured item foreign customers under the export under the custody, it is 200 million. It is zero rated supply. It is zero rated. Zero rated supply. So you want to remember those stuff. It is zero rated. Exports. Exports. It is a zero rated supply. Zero rated supply. Right? True. Supply of tailor-made school uniform to the under tax invoices 20 million. It is again, you can see here you can see the supply of tailor-made uniforms to the private school. Supply of uniforms to private schools under tax invoices, right? Supply of the tailor-made garments to the government hospital against tax invoice 40 million. It means 40 million need to be doubled, right? To government hospitals, right? Cool. Supply of handloom textiles 10 million. It is exempted supply. So if a supply of handloom textiles, supply of handloom textiles, it is a exempted supply. You want to rush through. Keep remember those stuff. It is exempted supply. If I go through with the tax exemption list, you can identify here the handloom products because in the such exempted goods and services under there, you can identify the handloom textiles are exempted supply. Okay. Then the total output tax items are hereafter is over because sales are over. Now we can calculate the output tax. What is the output tax? Now I am going to calculate. Here, this total output tax is 43,622,711.86 cents. It is the total output tax. Here you can see the value of supply is how much? This much. Then we are going to go ahead with input tax. The value of purchases during the period, taxable period as follows. All the figures are exclusive because VAT are not there. Exclusive means not import values for the VAT purpose. Value of raw materials under the deferment facility and the upfront basis means cash basis. Both are tax liable. Deferment facility in the sense you are getting a facility, you are not paying, you are deferring the VAT payment. You are not deferring the VAT, you are deferring the VAT payment, right? Go to the slide if you are not remember. If it is a deferment facility, here, deferment on importation, deferment is made on the production of a bank guarantee or the treasury bill or the corporate debate guarantee which covers the amount of the VAT on imports. If VAT is deferred by the Sri Lankan customs, technically such importation is chargeable with VAT, but the payment was deferred. It is charging VAT, but the payment is deferred. You are lately paying, later on paying. Importer of goods is required to claim VAT, deferred VAT in his VAT return as input tax. IRD issued credit voucher for such amount deferred VAT after verifying the compliance. The credit voucher should be submitted to the customs by importer should settle the amount of deferred VAT before the due date. Otherwise, you are subject to a penalty. For the input tax, so the import under deferment penalty is 20 million. Imports there, input tax, imports are there. Import under deferment facility. How much? It is 20 million. Sorry, not 20 million. It is something like, yes, 20 million into 18%. Then value input VAT is this much. 3.6 million. Import upfront basis. Import under upfront basis. It is against 40 million, right? 5 million into 18%, then it is like this. 900,000. Local purchases, because you have low imports are there, and now you have local purchases. You are domestically purchasing. Local purchases are there. Local purchases. Raw materials obtained under tax invoices. Raw material and services obtained under tax invoices. You want to keep remember 14 million. It is 18%. Again, it is 7.2 million. Raw materials obtained under commercial invoice. Raw materials under commercial invoice. If you are purchasing raw material under commercial invoice, means you are purchasing from the non-VAT registered person. Therefore, you are not paying a VAT there. If the supply is not VAT registered, they can't charge VAT from you, right? Raw material and services obtained on commercial invoice, 30 million. Right? What is the value of purchase there? If you are VAT purchase, 30 million divided by, like this. Right. Raw material services obtained on commercial invoices, not VAT liable. So not you can't claim input VAT because you are not paying a VAT. Right. Here you have again payments. Payments. You have payments. Right. Salaries to staff. It is excluded supply. Excluded because you are not in when you are receiving your salaries, you are not paying a VAT. Salaries of staff. It is excluded supply, not exempted, excluded supply. Excluded supply. It is 12 million. 12 million. Then you have director fees, it's also excluded. 8 million. I'm not going to write here, it's excluded. Right. Again, electricity bills, it is liable. Electricity bills. Sorry, it is exempted supply. Director fees are there. We are taking electricity current. It is exempted supply, like Hamburg. If I go through with the IRD website, the exempted supply list, it's there. Here, electricity, it is exempted supply. Exemptions, right? Electricity for the exempted supply. Yeah, electricity bills, it is exempted supply. Telephone bills, it is liable. Telephone bill, you can claim. Telephone bills, office, it is how much? It is 620,000. 18%. Okay. But mobile bills, only 50% you can claim. Mobile bills, 50% can claim. Provision is there. 360,000. The time being, we are incorporating total amount. After that, as a disallowable input tax, we can reduce the 32,400 because the half of this, right? Half of this. Okay. Otherwise, you can put 10, then you no need to add the disallowable. We are just for the time being, we are putting the total, and half of that, the 50%, we are disallowing. Right? Water bills, it is charging 2%. Water bills and janitorial services, cleaning service, is charging. Right? Water bill, cleaning service, right? Cleaning service. Right. I think it's clear. Right. Then you have, we all, in addition to the expenses during the period, the company is incurred number of expenses on tax invoice. The input VAT for such invoice is 1320. 1320. Input VAT, input VAT on tax invoices, right? It's clear. It's directly given. No segregation or no given the value of supply, directly given the input VAT. Right. Then we need to calculate the total input tax. Total input tax is there. Now I'm going to calculate the total input tax. Here it is 13,450,000, something like that. But you can't claim this total input tax as it is. These allowable input taxes are there. These allowable input taxes are there. Less you want to deduct. Here I'm incorporating less. These allowable input tax on specific expenses. On specific expense, can you remember this 50%? I told you 50% only can claim. Mobile bills, 50%. If means you want to deduct here into 50%. Oh, sorry. Here into 50% because part is only liable. 50% means 2 divided by 2, right? Right. And on specific expenses here on specific expenses, right? We determine that it's mobile bills. Now we have on exempted supply because the handloom products are exempted. Therefore, we can't claim that particular supplies to the purchasers. It means අපි purchase කරා මේකේ input VAT එක අපිට claim කරන්න බෑ. Because we are supplying the handloom textiles to the country. It is exempted, but in order to supply අපි ගන්න එපා වඩු. මේක ගත්තාම අපි input tax එක අපිට claim කරන්න බෑ. Right? On exempted supply, on exempted supply, it means handloom product, handloom, right? On exempted supply. So you want to remember there is a formula for this on exempted supply handloom. What is the formula is that you need to get the total value of supply for the handloom. It is 10 million divided by what? The total value of supply. Then you are getting one answer. Into multiplied into total input tax, total input tax minus disallowable expenses. Disallowable expenses on specific expenses because the mobile bill 50%. If you are correctly doing this, you will get an answer. I explain now. This is the formula. කොහොමද මං ගත්තේ? මේක කොහොමද මං ගත්තේ? You need to get the brush here total value of supply. Value of supply එක මේකනේ. මේක ගන්නවා. 4,49,237යි 289ක් කියමුකෝ. ඒකේ exempted supply එක කීයද? නම් ඒකේ input tax එක කීයද? Total input tax එක අපිට තියෙනවනේ මේ fraction එකක් විතර total output value of supply එකෙන් 10 million තමයි මේක නම් total input tax එකෙන් කොච්චරක් විය යුතුද මේක multiply කරන්න total input tax එක අපිට ආව disallowable අඩු කරලා නැතුව මෙච්චරක් ඒකෙන් මේ 30400 අඩු කරන්න එතකොට එනවා right බලන්න එතකොට එනවා මේ මම අරන් තියෙන්නේ කොහමද එහෙම අරන් තියෙන්නේ formulas ටික බලන්න right right then we have allowable input tax allowable input tax කොච්චරක්ද allowable input tax එක total input tax minus these two here we have allowable input tax allowable input tax if I use right allowable input tax I will same to here allowable input tax now we have total input tax and total output tax here I'm writing here total output tax on sales it's this much total input tax allowable input tax you want to deduct it it's this much I will write forward right then you get VAT liability VAT liability VAT liability right then you need to deduct any tax credit tax credits tax credits tax credits so the here we don't have any tax credit it mentioned that you have entitled to this tax credit because no they are so the balance payment or the refund due it's nil balance payment or the refund due balance payable we have payable no if the output tax is greater than the input tax we have payable other side it's refund due here how much we have same this right right the balance payable the refund due is this because here it's mentioned that the brought forward unabsorbed input tax on the previous 2.4 million we want to deduct brought forward unabsorbed so input tax from previous period and you so can you remember in the deferment facility we are not paying but we are charging that input tax but we are not actually paying so now the all credit vouchers blended the import under the deferment facility has been submitted to the Director General of Customs. So now it's you need to time to pay. So you want to add that amount because you are want to pay that now. Here it's like here. Deferment. Import under deferment facility. Or deferring, now you are paying. You want to pay. Then you have total tax payable. So the VAT payable. What is that? Here. This is the final answer. Total. Use another color there, no? Total VAT payable. Total VAT payable, right? All right, cool. Now it's the end of the session. Hope you will practice this and get a full marks. Thank you all and have a nice day.